Hey guys, welcome back to the Capital Mindset Show. Today we're going to be doing an update on Intel. So Intel reported earnings last week. This video is being filmed on this Sunday. Again, apologize for being so busy. And I don't know when you guys are going to be seeing this video, but you guys will be seeing this video within the week, so at the very least. So Intel, if we actually take a look at the price action, you probably have noticed that it has absolutely not been doing well. It has not been its day, down 8.56% on the Friday, so last Friday, and over the past 5 days, it is down 7.57%. Just to highlight that a lot of the, downturn has been in that single day. So what happened? Well, they reported earnings, and in those earnings, we got to see some interesting highlights or some weaknesses that we did mention or talk about in our last video with Intel. And that video will actually show you right here, was posted on April 30th, 2022. It does seem that people do like the Intel videos. I don't know why. I mean, I think Intel is popular for some reason. I don't entirely know. Like it doesn't make sense to me why Intel is so talked about, but yeah, I don't know why. Regardless, it is, and that's just about it. But anyways, so Intel is down here today. So what's going on? Well, they lost revenues, or revenues fell, to be more precise, by about 22%. And one thing that management was actually highlighting, if you didn't check out the earnings call, I'll kind of summarize it for you. But in essence, management is saying that this is the bottom, this is as low as it goes, and from here it's going to get better. And so in the second half of the year, it will get better. And that may be true, by the way. I'm not going to say that that's not true, whatever, but that's just what management said. Of course, investors are kind of skeptical on that, and that's why you're seeing these cheaper prices here today. Now, it does appear cheap at a 7.79 PE ratio, but that's according to the Google that you see right above my shoulder. I'll get out of your way. And it's yielding about 4.02%. So a bit of commentary on the dividend is that I think, and I have thought this for a while, I don't agree with capital or the management's allocation of capital for the past year or so. I think that, well, management before this current management has done a poor job, and current management's done a better job, but not the job. It's difficult to make up for what previous management did. That's all I'll say, because it's not, I can't fault them for everything. Okay. A lot of the bearing of the blame has to go on previous management, and management in the past has focused on buybacks, dividends, squandered the necessary investments, and probably bloated the company up with tons of bureaucracy. You can probably ask or find out from Intel employees today how they feel within the American divisions. And one thing that management thought of doing last year, which I spoke about in older Intel videos last year when we talked about selling Intel at $50-something, that does appear as though it aged well. I'll actually show you guys that video. And this is the old video. It was posted on December 13th, 2021. And if you're curious, you can go check it out. But in this video, and you can actually read through the comments. The comments are pretty interesting back then to kind of gauge how people kind of digested this video, or my thoughts behind this video, and see how things have, aged across time. But some of the points I made here weren't precisely what caused the woes of Intel, but it was kind of a smell test, okay, of sorts. And again, my whole premise is that if you disagree with what management has done, then why would you invest in that company, right? They are the stewards of your capital, so you have to, or you should agree with what they're doing with your money. So yeah, this is the April 30th video. So if you're willing to go check those out, you guys can, or you can just, just hear my summary about it. But it's, in essence, I didn't agree with their allocation of capital back then, so I separated myself from the company. And, hindsight, it is good now. That was a really good move, actually. And we made out with a very small profit. I talked about it in that video. Of course, people were kind of mixed feelings regarding that move and saying it probably was a poor move. But yeah, anyways, going to Intel's price action more recently, again, we saw that drawdown in sales growth, or drawdown in revenue, by about 22%. What the heck happened? Again, management's been highlighting that, hey, there's an inventory issue. Our customers ordered too many parts from us. Now, there is a supply chain issue, but kind of on the lower end of the chips market, not so much in the higher end. So let's be a little bit careful with that. Of course, we also have some preliminary issues to talk about. Remember that Taiwan Semiconductor has a majority of its production outside of the United States. However, they are making necessary investments. We have the CHIPS CHIPS Act that was actually also passed, and I'll talk about that here. And you can see the story was posted on July 28th. U.S. Senate passes the bill to boost chip manufacturing to compete with China. In summary, the United States is looking to subsidize a lot of the production for different facilities within the United States in an effort to build the capabilities of the United States to produce its own chips. Instead of its reliance on, to be more accurate, let's not use the word China, let's use Taiwan. So Taiwan Semiconductor, the company, is mainly producing most of the chips that you kind of see in AMD, NVIDIA. They are the best at what they do. They've actually shown themselves to be the best at what they do, with Samsung being a close second, Intel a third, and we have, I think, Global Foundries a fourth. So Intel is trying to improve its capabilities in that direction, and they stand to benefit as well should something happen to, let's say, Taiwan. Now, people have kind of counter-argued and say, well, Taiwan is investing in production here in the United States. Let's think about that for a split second. Let's say something happens to Taiwan with, a larger country that's right next door, China, and what would happen to the talent? Because a company just simply isn't just the company. It has a lot to do with the talent. The talent wants security to a degree. You don't think Samsung's gonna, say, hey, you can come to it, or some event. You don't think employees are gonna, it's gonna definitely stir the pot. So I disagree with the notion that it's gonna have no effect. Okay, I don't agree with that. However, will it kill Taiwan Semiconductor? Probably not if they have production capabilities around the world, which I do think the company understands that. And I think that they understand these risks, or management is paid enough to understand those risks, so they should understand them. And they are, of course, trying to mitigate those risks. And Intel, of course, is going to do what Intel does. They actually fought in this bill. They lobbied to exclude a lot of other companies, saying that, of course, they're not, American companies, so they shouldn't have this. But anyways, regardless, it does seem for now that the CHIPS Act does benefit a bunch of companies, including KLA Corporation, Intel, ASML, a variety of chips, not just Intel and AMD, for example. But this is good news overall for the CHIPS Act for Intel. I'm not going to say it's not, but it is also good news for their competitors. Now, Intel's investments into the fabrication facilities is a good investment. I've never disagreed with that. My big contention was the way they were getting that capital. So finishing up that point with the dividend, I actually do think, and I have thought this for a while, that they should be cutting that dividend. A lot of disagreement with some of the analysis I saw on YouTube is a bit too optimistic in some approach to what Intel has been doing. Of course, you had various other investment analysts talk about Intel favorably. I think that if you talk to people who work in the industry, they'd give you a different picture of the company and its woes alongside with AMD. AMD is essentially, at the present moment in time, producing a better product at a cheaper cost and more efficiency in terms of energy usage, so which is a big deal, especially in the enterprise space. So don't only use the anecdotal evidence of your computer. I also build my own PC, and yes, I know we can say, okay, team blue or team red, but we want to think about it from the perspective of, let's say, the enterprise, right? But that's beyond just us or you and I. Now, Intel currently still dominates the enterprise space. They just actually won, I think, 2 new contracts in Meta and AWS or Amazon. So that's good news for the company. However, AMD, that doesn't mean that they're not taking market share. They, in fact, are. And as supply chains actually correct themselves, it is worse off for Intel. This is something I've talked about in the past as well. Intel got lucky. Right? What did they get lucky with? Well, the supply chain issues happened at the same time that they lost leadership. So they didn't have a problem until now, seemingly selling everything that, they built. So that's a bit of a problem now that we do see. Well, it was still a problem, the supply chains, but they got lucky in regards to where they were in terms of quality, production, and pricing. Now, Intel, funnily enough, management is saying that they are, trying to see if they can improve margins with pricing power. Another way of saying raising prices. Right, that's one thing that they're attempting to do, apparently. But we'll see how that pans out. I think that it'd be best, used in terms of figuring out how to fix their production capabilities and perhaps improving their microarchitecture for one. But I think that their microarchitecture might be not the problem, the main problem being their production capabilities, catching up to Taiwan Semi, for example. So if we actually go back to the valuation, I'll actually talk about it from this perspective. So let's actually see what happens here. And real quick, I just want to zoom in for you guys here to make sure you guys, can see it properly. But yeah, I'll leave these growth rates up actually because they kind of illustrate something interesting. And what is that? that we're kind of illustrating. By the way, what I'm basically doing is I'm asking it to do some normalizations on the back end. Let me show you what happens basically if I remove those. But when we do see that it doesn't do that, we can see that we are taking basically it from its lower cash standpoint that it's using to invest in its R&D research as well as its capital expenditures. So yeah, it's going to be lower cash flows. So we're basically assuming if we don't normalize it, that's the case. Of course, analysts are expecting in the future that those expenditures will be said and done. They need to make this investments now for a future benefit. So if we ask it to, hey, can you give us a little bit of that adjustment right there? Well, yeah, there you go. So we kind of normalize that a bit. And we can see that if you expect zero growth, the model's asking me or telling me that perhaps a good price point would be around $24, which is still a big drop from here. And, at those prices, I'd be lying to you if I said I wasn't interested. And even today's prices, I got to tell you, it makes me question, right? A lot of people are discounting Intel now. It doesn't mean that they're wrong by any stretch of the imagination, but it makes me start to get curious. Like my brain starts to get fired up and say, okay, now everyone's questioning it. Even the greater bulls who may have YouTube channels who are really bullish on Intel at like $50-ish a share, they're questioning their thesis. That's when I like companies. I like companies when that's happening. Same with Netflix. We showed you guys. If you guys are curious, go check out the video with there's a much larger YouTube channel with, I think he has like 200,000 subscribers. And I show the evolution of Netflix and how he was very bullish on Netflix. He said it was going to go to $900 a share. And then I showed all the videos where he starts to basically make constant updates on Netflix, and each time he's getting more questionable about his analysis. So Intel's something similar. I like to see that. That's when I start to say, maybe now's the right time. May not be, actually. Let me just be very clear. May not be. But before, when I was maybe more hesitant on Intel, but kind of curious as it got lower, now I'm actually going to be genuinely curious. And there is a price point where I think Intel would be very interesting. I think that the company's balance sheet is still A-rated. It's still a good quality business. They have a lot of bloat in there, so that's still in there. They're not to the same point of IBM, where IBM bloated themselves with debt. They were still good credit rating, but they bloated themselves with debt with those buybacks. Intel still has a good balance sheet, no probable risk of bankruptcy in the near term. However, they have to fix and they have to course correct. Otherwise, there's going to be a big problem. Okay, I do take management's word for it that this 22% drop in revenue is somewhat of a fluke, a lot to do with ordered flows and order levels. I do think that they are going to lose market share. Let me be very clear. I think that market share isn't as drastic as what some retail investors might be thinking with that 22% drop. That wasn't necessarily the case. But, don't ignore that, all right? That's still a bit of an issue, right? We want to pay attention to see if that recovers. Now it's a question mark. Will it recover in the second half like management is saying? We'll just go for their word and say yes. You might want to wait and see what really happens, or you maybe know this a little bit in greater detail, and that's your edge in this instance to kind of say, okay, well, management's right on this. Maybe they're being too optimistic, or maybe they're being, they're right. This is kind of the floor in the second half of the year that things are going to recover nicely. And remember, in 2024, that's when the company has stated that supply chains will correct. We made a video really early on I think it was one of the first videos in 2021. And well, for us, it was later half of 2020 or second half of 2021. And we talked about how supply chains for chips won't fix themselves until 2023. And that was off of the data we saw. And of course, we also created a new video when it changed. And Intel was saying, for example, that we are going to see that in 2024. So all these things are kind of changing, but that's pretty much my update for Intel. Earnings were bad. Going forward into the future, will earnings be good? Yet to be seen. Is this a bottom? I don't know, but the price point is getting interesting. I think now is a different price point, obviously, than it was before when those YouTube channels were very excited about this company. We weren't excited about it. We didn't agree with management's allocation of capital. Now, yeah. I mean, it's really getting interesting, guys. It really is. So with that being said, guys, thank you guys so much for watching, and I will see you guys on the next one. Well, one more thing. I did also want to highlight, I actually do agree with the allocations in terms of percentage probability. I think that, if Intel grows at 12%, I don't necessarily think that's the case, but yeah, just being clear on that. With that being said, guys, thank you guys so much for watching, and I will see you guys on the next one. Bye.